The FOMC meeting kicking off today with the committee's rate decision coming in tomorrow at 2 p.m. Eastern. As of this morning, investors largely expecting a 25 basis point cut still. But the election outcome poses a question for the Fed moving forward. Could inflationary policy from the White House put the rate cutting cycle on hold? Here to break that down, we've got Jeanna Smialek, New York Times Federal Reserve and economy reporter. Jeanna, it's great to have you with us this morning. So that's where I want to start. Where is your head at in terms of what the election outcome means for the Fed's path forward?
Yeah, I think it actually injects quite a few questions into the sort of outlook for rates going forward. I think that we know that the Fed has set up for a rate cut this week. Markets are widely expecting a quarter-point rate cut tomorrow at the Fed's meeting. But I think after that, there could be a lot less certainty. Former President Trump, now President-elect Trump, has suggested several policies that could really matter to the inflation outlook, including really big tariffs that could feed into higher prices, including things like restrictions on immigration that could sort of feed into both wages and prices, depending on how they're implemented. And so I think that could pretty fundamentally shake up the outlook. If the Fed is looking at a world with higher inflation next year, they may not be able to cut interest rates as much.
Jeanna, from the conversations that you're having with policymakers, I guess, how do you think this changes the tone of the meeting today and tomorrow, and maybe the rhetoric or the message that we're going to be hearing from Powell?
Yeah, so I think we haven't heard from policymakers since this happened. Obviously, they are in their blackout period ahead of the Fed meeting. But what we do know is Fed officials in recent months and in recent weeks have been really closely focused on the inflation outlook as they think about what happens next with interest rates. They've also been really focused on the job market outlook as they think about what happens next. And so I think they're still going to be weighing those two things. It's just that equation might have shifted a little bit. And so if they see a world that's a little bit more inflationary, if they see that as a real and salient risk, now that President Trump has won election and now that there's a Republican Senate that will potentially pass some of his policies, I think you could see that shift Jay Powell's message and make it a bit of a warier one. And so we'll all be watching out for that tomorrow.
Jeanna, real quick, what do you think the read is, or how closely they are tracking those inflationary risks now?
Extremely closely. I mean, I think inflation has come down a ton. Inflation is almost back to normal, but it's not completely back to normal. On a core basis, it's still above the 2% goal that the Fed shoots for over time. And so I think that they are very alert to the possibility that in an economy this strong, if you do anything that sort of gooses it, if you do anything that pushes up prices, there is a risk that you could have an inflationary situation, and they need to be ready to react to that.
We know the Fed's very data dependent. I wonder how you're thinking about when we could start to see this election showing up in the data at all, with something like consumer sentiment, maybe even hiring ticking up, if there is sort of an optimistic view on the path forward for the economy and what that might mean for the Fed moving forward.
I think those things will probably take time. I think the really big things that could potentially matter and that could be more level set is we might sort of get some clarity on what's going to happen with trade as it becomes clear what's going to happen with tariffs. I think that's something that you could see sort of not necessarily impacting actual inflation, but certainly impacting the outlook for inflation. And I also think that you could certainly see it in markets. We're already seeing it in markets. Markets have reacted strongly to this decision, and you're seeing markets sort of anticipate both higher inflation, but also, at least in the case of stocks, a slightly sunnier outlook. And so, I think there are multiple places where this could show up.
I want to ask about one specific Fed member, and that's Michelle Bowman, who you've written about extensively. She was the lone dissenting voice when the Fed did vote to cut by 50 basis points, and she is conservative. I wonder what you're thinking, if you've heard anything from sources about the potential for her to become a bigger part of Trump's sphere of influence moving forward, potentially even playing a role in his administration.
Yeah, so I think that the consensus is that she's definitely positioned herself to be a contender for vice chair for supervision. The vice chair for supervision role will expire in 2026, and so Trump will have a chance to replace that person. She's by no means the only contender for that role. I think we're also looking at a world where there are people like Christina Paragon-Skinner at the University of Pennsylvania who would potentially be up for that. So not a shoo-in, but definitely someone to watch as we get into sort of the sweepstakes of who takes the big jobs at the Fed.
Jeanna Smialek, New York Times Federal Reserve and economy reporter. Thanks so much for taking the time to join us here this morning.